Moody's has put the credit ratings of 6 large U.S. banks, including Bank of New York Mellon, State Street and Northern Trust, under review for a possible downgrade. The credit ratings agency said late Monday that its warning on the 3 banks reflected ongoing strain in the U.S. banking sector, including increased pressures on funding and potential weaknesses in the amount of capital lenders are required to hold. A lower credit rating could push funding costs for those banks even higher. U.S. stock futures sank on the news, with the Dow set to open 250 points, or 0.7%, lower. S&P 500 futures also fell 0.7%, and Nasdaq futures were 0.8% lower. The U.S. banking industry was shaken earlier this year by the collapse of Silicon Valley Bank, Signature Bank and First Republic in quick succession. The other 3 big banks on the agency's radar are Truist TFC, Cullen/Frost and U.S. Bancorp, USB. The agency cited the same reasons for its action regarding those, but also mentioned rising risks associated with commercial real estate exposures. The value of U.S. offices is falling as remote work has become a lot more widespread since the pandemic. This, in turn, has raised fears that banks, which finance many commercial real estate deals, could suffer losses as a result. Regional and community banks are particularly exposed to these loans. Most regional banks have comparatively low regulatory capital versus the largest U.S. banks and global peers, Moody's noted Monday. U.S. banks' second quarter earnings showed material increases in funding costs and pressures on their profitability, partly related to a string of sharp interest rate hikes in the United States, the agency added. Moody's also downgraded 10 smaller U.S. banks Monday, including Commerce Bancshares, CBSH, Bach Financial Corporation and M&T Bank Corporation. Explaining the action, the agency cited, among other factors, a rising risk that lenders' assets will decline in value, in particular for small and mid-sized banks with large exposures to commercial real estate.